Hello.
Hello.
Hi, Megan. How are you today?
Hi, Justin. I'm doing great. How about you?
Good, thank you. We still have a little bit there. Theme music's gone. Good morning, everyone. Welcome to Benzinga's Blockchain Outlook in 2024. We're thrilled to have you with us today, and I am thrilled to have as my co-host Crypto Megan with me. Megan, come on and say hello to the audience. How are you today?
Hi. Yeah, first of all, thanks for having me. I'm so excited to do this show today with you, Justin. And man, it's such an exciting time in crypto. I mean, making history here. So it's going to be a great conversation.
Yes, going to be a strong focus on ETFs today. Very much looking forward to that. We're going to be speaking to Dave Lavelle, who is the global head of ETFs for Grayscale. Grayscale, of course, is one of the 15 applicants. I think it's 15 or it's 13 who was approved for a spot Bitcoin ETF. So that's remarkable in terms of allowing people outside of the Web3 space to be able to gain exposure to Bitcoin. So this is a phenomenal time, a phenomenal moment for us in history in the crypto community. And we're also going to be speaking shortly after to Brock Pierce, who is the former chairman of the Bitcoin Foundation, also the former co-founder of Tether, and just really a list as long as my arm. And at that point, we're going to be cutting to a great panel, including all sorts of people who have different outlooks on what's going on in Capitol Hill, what's going on with the SEC and Mika, and to kind of give us a U.S.-based and also kind of a global outlook on what these ETFs are going to do to Bitcoin, and is Bitcoin going to lift the rest of crypto out of the doldrums that it's been in for the past 20 months or so. How optimistic are you feeling, Megan? I know you follow the markets quite closely.
Yeah, I think we're par for the course right now. And I think there's no more important conversation to be had right now than this one about the ETFs, about the precedents being set by institutions like Grayscale. And I'm so excited to hear their vision, their outlook on the future and, what's to come, because this is just the start.
Yeah, absolutely. And Grayscale has been a great innovator in this space. I mean, we saw some movement from the SEC that was not entirely friendly to crypto overall during the last year. There were all, I mean, of course, FTX gave them a big black eye, and they seem to be playing it conservatively. I suppose they're playing it safe most of the year, doing a lot of legislation by litigation. There's Binance, of course. There's been a number of people that the Winklevosses, a number of people that they have brought into court or are on their way to bring into court. So this was a pleasant surprise to have this happen in January. It was really immediately after people were prognosticating that it wasn't going to happen until the beginning of Q2, like just a couple of days after we put out an article like that, actually. So going to be very cool to talk about it. And this is something that affects all of you folks. I mean, really, of course, Bitcoin requires no introduction. It is the world's most famous global decentralized digital currency. It's the one your grandma is most likely to have heard about. But the idea of putting it in an ETF wrapper. So I'm grateful to have Megan with me, who has that background in traditional finance. And let's go ahead and get Dave from Grayscale out here with us. I see that he's backstage. So let's go ahead and start the interview. Really looking forward to talking to him. He's a brilliant guy, guys. This is going to be lit, so please stay with us. Let's go ahead and bring David on if we can.
All right.
Dave, how are you today?
I'm doing great. It's great to be here. How are you guys?
I'm doing fantastic. It is great to see you. I like the sweater. You've got the very approachable kind of Mr. Rogers vibes going on today.
I'm an approachable guy. I'm glad I'm suiting the show.
Well, that's good. And of course, we're very excited I am, because I was in contact with Grayscale about the ETFs a lot last year. You and I did a great interview about it. I did a feature piece on that. And so how cool to be able to talk at the start of 2024 and have it done. You can't make that joke anymore about you being the head of ETFs who never actually got an ETF off the ground at Grayscale. And now you have. Now that's all true.
Yeah,
Well,
it's been incredibly exciting. Look, I mean, you and I talked about this. We, embarked on this journey in 2013. It certainly predates
right.
me, but we had a long-term commitment and vision that, investors were going to want Bitcoin exposure in an exchange traded product wrapper. And so, look, this is a culmination of 2.5 years of my work and 10 years of the Grayscale team's work more broadly. And we're incredibly, incredibly thrilled about it. But I mean, it's probably worth taking the listeners, back a little bit and talking about kind of how we got here. But in October of 21, when, the SEC decided that it was permissible to have Bitcoin futures exposure in an exchange traded product, we thought it was, perfectly permissible to then also permit Bitcoin spot to be, brought to market in an exchange traded product. And so that's the day that we filed for the uplisting of GBTC, our flagship product. And in June of 22, the SEC denied that application. And that was the day that we challenged that decision in the DC Circuit Court of Appeals. And fortunately, in August of 2023 was when we got the decision from the DC Circuit Court of Appeals that they in fact agreed with us and determined that the SEC had behaved impermissibly under the Administrative Procedures Act, which led to a really formative and very constructive dialogue over the past several months, which led to us being able to uplist GBTC to an ETF a couple of weeks ago. So it's been very gratifying personally. It's been very gratifying professionally for myself, but also for the Grayscale team, and of course for our broad investor base.
And what an accomplishment! I mean, Grayscale already has the largest fund for Bitcoin, it seems like you have a precedent-setting case here. Ultimately, that denial of your application and then the overturning of that denial, that was precedent that was cited by Gensler when they finally did the approval just a couple of weeks ago. How has that journey been for Grayscale? Did you expect it to be here by now? Is this kind of what you were hoping for, David? And where is this taking you now?
Look, we had always said it was a matter of when, not if, and that was something that we stood by for a very long time. We had an incredibly high level of conviction to deliver this for our investors. But at the same time, we respected the process, and we respect that the SEC has a mandate of investor protection. And so, look, it's never an easy decision to, challenge your regulator. However, we had high conviction about our case. This was not about a thumbs up or a thumbs down to Bitcoin from the regulatory agency. This was about procedure. This is about being treated fairly. And obviously, the courts had a very strong decision and a unanimous decision that supported our conviction. And so we're just really, really thrilled to be here now, having a product in market, having the most liquid Bitcoin ETP in market, and really delivering on that promise to our investors.
Wow, that's fantastic. And precedenting most definitely it hasn't been an easy road, but visions like this often aren't. So I know that the community is grateful to you for having set this precedent for sure. And now that you do have this product on the market, where does the spot Bitcoin ETF fit into investors' portfolios? And do you see this as being like kind of the next big step in bringing together TradFi and DeFi investors?
So this is the question that we get asked most. Actually, there's two questions we get asked. The first question is, why would I ever use Bitcoin to buy my coffee in the morning? And we won't get into that today. But the second is, where does it fit in a client's portfolio? And oftentimes, financial advisors are facing off with clients who are more intelligent on this space than they are. And it puts them in a precarious position. Now, historically, many financial advisor, wealth management platforms haven't allowed for digital assets to be invested in. So they had a bit of an out, but they were then losing assets to, other platforms or to direct investing, crypto investing platforms. And so now that we have an ETF in market, it's putting the financial advisors in a precarious position where they now have to answer for where it does fit into a client's portfolio. And I think there's a couple of ways that you could address that. First of all, very quick review. People are like, it's an alt and it fits in your alt allocation. But I think we actually view it as something a little bit differently. Number one, it can be viewed as a digital store of value. So having the similar properties that gold has, it has very low correlations to other other aspects of an investor's portfolio. It offers diversification, and that lack of correlation gives, really interesting return profiles. And second, it's really can be viewed as a disruptive technology. And so where would that fit into kind of a small cap tech allocation that has very high growth, performance characteristics? And so I think financial advisors are feeling more and more comfortable with kind of, taking a little bit of that gold allocation or a little bit of that commodity allocation, or a little bit of that precious metal allocation, and inserting some Bitcoin, or taking a look at where they have an allocation to small cap tech, and utilizing, Bitcoin ETF in that regard. Look, the asset is volatile. We acknowledge that. But, we took a look, and our research team took a look a couple of weeks ago upon the GBTC getting uplisted. And there were 200 or 201 ETFs that had higher annualized volatility. So look, there is volatility in the market. Financial advisors obviously have suitability concerns and need to make sure that it fits into a client's portfolio. But we think there's a number of different applications that can really bring value to a client's portfolio, really bring diversification, and really bring an opportunity for growth.
Absolutely. Millions of investors now having access to this. As Michael Saylor put it, a 6-lane superhighway to get, traditional investors or people who aren't so necessarily involved in this space access to it easily. So,
I like that, superhighway.
Yeah.
Mm-hmm.
Yeah.
And there have been so many hopes, especially in 2023. I think we were all looking for some good news in the crypto world. There's been so many hopes pinned on spot Bitcoin ETFs that I think people maybe sometimes are a little bit overly exuberant, and we're hoping, that we would have immediate explosion in value. I know that there has been some people moving or selling off their positions within the Grayscale BTC fund. But to talk to you about it, it seems like that is just kind of to be expected. How do you answer questions about that?
Yeah, absolutely. Everything that we have seen has been to be expected. There were a number of investors in GBTC when it was in its kind of former private placement that was publicly quoted on the OTC markets, where it did not have simultaneous creation redemption. And so the opportunity to kind of bring the product and uplist the product to an ETF allowed for simultaneous creation redemption. There will be inflows, there will be outflows. But, one thing that I always like to say is we started at 28 billion in assets, and everybody showed up kind of to compete with us. And, having 100% market share was a nice place to be, but not a place that we expected to be for the long term. And look, some of the largest asset managers in the world have, joined us. We welcome their company. We respect them, obviously. But a rising tide will lift all boats, and it's a real validation for the asset class as a whole. It's a real validation for Bitcoin, and we think it's incredibly, incredibly bullish long-term for digital assets.
What does this say about the prospects of other digital asset ETFs, maybe as soon as 2024, but of course, and beyond? Are we going to be looking for a Doge ETF coming this year? Where does it stop? Bitcoin makes the most sense. Everyone would agree with that. Of course, there's an obvious second, which is Ethereum. I know that you have a significant Ethereum fund. What I know that, of course, you can't necessarily share all of your inside baseball about it, but give us a picture of where we are on that and what Grayscale's looking at with putting an ETF wrapper around digital assets.
There's a lot that is public and available in the public domain, and so I can shed some light on that. Number one, we have Ethereum futures products. On the day that Ethereum futures exchange-traded products started trading, we filed to uplist ETHE, our flagship Ethereum fund, to be uplisted to the New York Stock Exchange. So, that comes with a statutory 240-day clock from the SEC. So we expect to get a decision on that product in the June timeframe. So right now, I would say it's about 50-50 chance they're going to say yes or they're going to say no. Right. But we do have the precedent of having Ethereum futures products trading in the market. And we do have, a proof point that our 4-phase life cycle, which has been validated with GBTC uplisting to the New York Stock Exchange's ARCA platform, is a great precedent for, all of our other private placement, products that are trading on the OTC markets to ultimately, become ETFs.
That's really interesting. And just as a question, a follow-up question to that, the Ethereum ETF, if and when it were to be approved, how would investors be explained more or less what that would look like as a part of their portfolio? Would it be like the tech play, the Tesla play of crypto, or how would you go about that as an asset manager?
Well, I always like to say that not every ETF is created equally and not every ETF issuer is created equally. And some of the work that we are doing as a crypto specialist and to be able to kind of answer those questions and drive real proactive education is going to be why investors are going to want to partner with Grayscale. So in 2013, when we thought Bitcoin was a great opportunity for investors, to allocate to, was 10 years ahead of an ETF actually coming to market. And so we are prepared. We have great research on our website. We have a great research team, and we love to be front-footed about some of the things that we're working on that investors aren't yet thinking about. A great example of that would be, the partnership that we have with FTSE Russell to deliver the crypto sectors. And so this is not just about Bitcoin and Ethereum. This is about an entirety of an asset class that's being developed, and the way to think about it and to define a vernacular and to think about, crypto investing in the form of sectors, just like investors have, become very comfortable in the equity marketplace about thinking about sector allocations and overweights and underweights. And so we're really excited about the future. We think that this is just the beginning. We're super pleased at the engagement we had and the ability for us to deliver on our promise to our investors. And this is just the beginning.
That's great. And it's such an honor to have you come and speak with us today, Dave. I appreciate that. It's always great to be able to talk to you for context. Just to leave off something that on a note that speaks directly to the audience that's listening at home, if I am doing my own research and I'm trying to keep tabs with what's going on with ETFs right now, where would you suggest that people look? None of this is financial advice, but in order to stay informed, in order to stay current on what's available and how digital assets is developing as an asset class that you can invest in this way.
Yeah, 100%. I'll go back to the statement I made before. Not every ETF is created equally. Not every ETF issuer is created equally. Grayscale.com has a tremendous amount of information. Pick up the phone and call us. We have resources for you. We want to answer your questions. We want to make sure you're informed. We want to make sure you're investing with confidence, and we're here for that.
The approachable ETF, like you said, Justin.
No, that's fantastic. Yeah, I feel bad. I actually meant it as a compliment, Dave. You look great.
I think it is a compliment. I think it's what we need in this space. We need an approachable ETF.
I've got my Abe Proman the Sausage King t-shirt on today. It's actually a brand new one I got for Christmas. That's a Ferris Bueller reference for everyone who's watching who's 30 years younger than me. I'm just gonna tell my kids tonight that you were honored to have me on, because they don't feel honored to have me around at all. So I just take that as a win. All right. If my kids feel honored, they really keep it to themselves. They keep that pretty close to the vest. That's pretty funny. All right, man. It's been so good talking to you again, Dave. Come back at us soon. I want to hear more about other applications as they become a matter that we can talk about. This approval allowed us to do this interview, so we're really thrilled about it. It's something I know a lot of people are wondering about, and it's a great win for the crypto community. So thank you so much, Dave.
Absolutely.
Thank you for your time.
Thank you very much as well. It's been great to be here. I'll see you guys soon.
Bye.
Thanks, guys. Okay, so we're going to take Dave off, and we have the great Brock Pierce coming on with us. Brock is, of course, an entrepreneur and investor. You may know him as he was, of course, also a child actor from going back to the Mighty Ducks. But you may know him from being one of the co-founders of Tether, for example. But he was also former chairman of the Bitcoin Foundation, senior advisor to the UN, futurist, philanthropist, economist, creator. At this point, Brock's got one of those resumes that you can only really hit the highlights in an introduction like this. Hopefully everyone's already familiar with who he is. Let's go ahead and get Brock out here. He is a great place to start asking about Bitcoin itself. Good morning, Mr. Pierce. How are you, sir?
Well, good morning, and I enjoyed that last segment. Obviously, it's the main topic of today.
Yeah,
what's going on with ETFs, and I think the results are exactly what we are used to seeing, which is trade on buy on the hype, sell on the results, and Bitcoin got a big lift leading up to the ETFs going live, and It should not come as a surprise that the market would drop. It's been 15%. Obviously, the big hit, I don't know if I was here early enough, was the impact it had on the Bitcoin stocks. The biggest impact here is the Bitcoin mining stocks were your ETF equivalent for the public markets. And so there has been a public angle or play, and those stocks have been hit by more like 30-40% relative to the 15% drop in Bitcoin.
And I've had the pleasure of interviewing you probably about a dozen times now over the past 7 years or something. I really take you to be someone who just loves Bitcoin, loves the notion behind it, the idea of a decentralized digital currency independent of state. I know that that's an idea that's near and dear to your heart. You've spoken to El Salvador and other countries that are looking to adopt Bitcoin and so forth. Having sort of an emotional investment in watching this gigantic global project unfold, what do you see the advent of ETFs doing to our beloved Bitcoin at this point? Everyone's hoping that the answer is make it extraordinarily valuable. That's what people would like to hear. But, overall, what do you think the effects are going to be? Because in a way, I also see this as a situation where we're going to have to share in a way that we're not used to. People who don't have digital wallets are going to be buying exposure to Bitcoin through these ETFs. So it'll change the playing field a little bit.
I think it's a great thing. Price aside, like, the price movement isn't what gets me excited. Price is just the primary barometer of sentiment, right? Sentiment goes up, sentiment goes down. It's all sorts of emotional sort of things, that drive that. What it's ultimately creating is a more resilient Bitcoin. And a more resilient Bitcoin is a good thing, because now the SEC has approved these public ETFs where, we're becoming institutionalized. And I don't think that's a bad thing. Once you're an asset class that's held on the largest balance sheets in the world by the most prestigious financial institutions in the world, and the Securities and Exchange Commission has permitted this, the idea of government intervention to, call it go to war with Bitcoin, has been substantially decreased as a result of this event. So I'd say in the giant war of freedom and people having access to this alternative asset class that they believe in, this was a huge victory for the people and for Bitcoin, in that it's hard to roll this one back. This one is kind of, arguably like a BC AD almost sort of event. It's more blessed than after blessed. Like, we were all these pioneers, piratey, kind of fringe group, that we're talking about Bitcoin, to like, we've been blessed by the authority effectively, which means not that Bitcoin wasn't here to stay. We all know that, but I think this is a major turning point. And I think that's perhaps a takeaway that I've not really heard stated elsewhere. I'm sure someone has. There's nothing new under the sun, but I think that's a valuable insight.
Yeah, I think that's amazing. It's going from the kind of like adolescent phase to its more mature phase, in which we're getting that validation from the authorities, from the government, whether they actually came out and endorsed it or not. It's a big step that, as you said, is putting it in motion, and there's really no turning back. It's like we've crossed that line now to where we're moving forward with this and getting that validation in the public eye. And so we decided that you were great for this question, being a forward thinker and somebody who's kind of like having a vision of the future. I wanted to go back to a podcast I did with Tim Draper, and he was kind of like explaining his vision for the future of Bitcoin. And he was kind of saying that back in the Clinton era, when Clinton was president and the internet was coming about, the media were all over him, and they were saying, are you going to tax this? Are you going to regulate it? How are you going to get in front of this thing? And instead of trying to control it, he essentially just let it rip. And as a result of that, we've got Google, Amazon, Apple, all in the US, Uber, all these incredibly innovative companies here. How do you see this playing out in the future for crypto? Do you think we could have a similar scenario if we were to head that route?
Yeah, I think to get to call it politics in the United States, I think this is a big victory for America. I mean, I can tell you, as an American who ran for president and is involved in our situation, whether it be in my role in the United Nations, the work that I do with unicorn.org, the United Council of Rising Nations, where I teach innovation to heads of state, probably about 50 different governments around the world, this is a big one where a lot of American entrepreneurs, have felt like leaving the U.S. A lot of businesses have felt like leaving the U.S. And capital markets were less inclined to invest in U.S. businesses because of the regulatory uncertainty. Capital markets like clarity; they like certainty. And so this is, I think, a great thing for American entrepreneurs and businesses and people that want to continue to live here, that are Bitcoiners. And one of the other things I like to point out is that, Bitcoiners and crypto, call it currency people in general, we're single issue voters, right? Maybe not the people that are buying ETFs. I'd say maybe they're, call it crypto curious. But by the way, I also think that that's I think that's going to be a really useful thing too. One of the problems, that so many newcomers that come to Bitcoin have had, not as much these days because your centralized exchanges, mitigate some of these risks, but it's loss of your first purchase, right? It's loss of your first investment. How many people have lost their first?
So many.
Their first buy. I mean, certainly for those of us that relied on paper wallets back in the day, for anybody who knows what that is,
Absolutely.
It's a legitimate issue. And if we want, Moby to go mainstream, if we want this to become something that is truly accessible to the masses, that security and that, ease of, call it entry, as you learn, how this stuff works, I think that this is another, positive step forward for those that don't know anything to be able to safely access the market, to then do their research, and then, crawl before you walk, walk before you run. And for those of us that have been, in this market for a while, the market's looking bullish. Just because we're down 15% right now, not take away from the fact that we are in bullish market conditions, and we might be, on the verge of, our next bull run. And for those of us that know how to run in a bull market, this could be a phenomenal year for all of us. Everybody should still feel, I think, very excited about the prospects of 2024. And by the way, back to politics, I don't know if you saw this, but both Donald Trump, I think to Vivek's credit, but also RFK Jr., have both spoken out and said not under their presidencies would they allow a central bank digital currency. Since we brought up politics, I think that is relevant current
it's very
news. Big. And I think these are all positive developments for the crypto community.
So you're a visionary in the space. I think it's fair to say, Brock, you've got a track record behind you that's really enormous. So when you look at how long you've been invested in this and all that you've done, what is your fondest hope for Bitcoin and for the greater crypto world in 2024?
Well, I mean, it's back to, we're in that sort of, I'd say, positive sentiment, bullish market conditions. And the good news is when things get, bullish and go bull, this is when, capital starts getting allocated. This is when, the conferences are at their largest. This is when what I call the conference circuit kicks off again. This is when everybody at every dining room table, unfortunately, you start hearing all about it from your Uber drivers and taxi drivers and everywhere else. These are those market conditions where, as I like to say, bear markets bear fruit, bull markets produce bullshit.
I like that.
But there's also a lot of good things that come out of it. Capital gets loose, everything gets fun, and just keep your, try to keep cool headed. If you've been through this market before, be wise, learn from your lessons, but it's exciting times. This is when all your next batches of companies get funded. Some of them die in the next bear market. Some of them understand that, you run in the bull market and you crawl in the bear market. It's basically, you go from, you're basically going into hibernation, and hopefully you've prepared yourself for each one of these market cycles. If we even end up with another one of those market cycles, right? It's a non-correlated asset class. We tend to go up and down with other markets. At some point, crypto does break free, at least theoretically. I've been talking about it for 10 years. So, I mean, it might be another 10 years before we reach that point. But so much of this is dependent upon global market conditions. I mean, look at what's going on in Argentina. I can tell you, talking to world leaders, the desire to embrace Bitcoin at a national level and say, hey, this is a great thing. We want our people to have access to this. We're in a wonderful place. I couldn't be happier about the outlook for 2024. But like all things, be careful.
Right. Well, thank you so much, Brock. It's been an honor to speak to you again. We look forward to touching base with you more as more things develop over 2024. It looks like a really auspicious start to the year, and we very much appreciate you taking the time to speak with us today.
Yes,
thank you for
It's
having
been
me.
amazing.
And, until the next time.
All right. Thanks, Brock. We'll talk to you soon. All right, excellent. So now we're going to bring on a great panel. For those of you who follow the Benzinga Spaces, the other Spaces shows that I do, you might recognize some of these names. We've got Jesper Toft, Joey Garcia, Stefan Rust. I think that, and of course Alex, which is great. Some of my favorite people, some of my favorite guests that I've had, giving us points of view that include, working with the UN, being a lobbyist on Capitol Hill, lots of familiarity with Mika and with the SEC. So we're going to dig into that a little bit more about what the SEC sentiment is. So stick with us, everyone. Let's go ahead and bring the panelists up and get started into this. We've got a lot of territory to cover. Everyone, welcome.
Hello.
Hey.
Hello.
Great to meet you.
It's so fantastic to have you all here. Thank you for joining us today. I think we can all agree that this is, a good moment in time for crypto overall and for Bitcoin in particular, but hopefully for the investors. Let's go ahead and talk to. We'll start with Stefan since you're up top left. Stefan, why don't you go ahead and just quickly introduce yourself and tell us a little bit about what you do.
Hi everybody. Stefan Roost, founder of Trueflation. Trueflation, we're basically a definitive reference point for RWA pricing. One of the core indexes that we've built out is the inflation index, which we believe is the true inflation, aggregating some 18 million items, 3 price feeds per item every single day, and bringing that to the 8 different blockchains live today.
Right, and you're also the former head of Bitcoin.com, I believe, right? So it's another great reason to have you on the panel. You're always a fantastic guest, so very glad to have you here. Joey from Zappo Bank, why don't you come on and tell us a little bit about Zappo, a little bit about what you do?
Sure, good stuff. Great to be here and lovely to meet all you guys. So Zappo Bank is really the first sort of bank credit institution that we're a Bitcoin native and blockchain native bank. So in the olden days, most of you guys will know Wensys. We moved lots and lots of things in developing, let's call it a network or platform that allows access to everyday users to the asset and the community through established banking rails. So it's the first sort of, let's call it, bridge between the Bitcoin ecosystem and the banking universe. So that's why, I've heard you guys talking about the ETFs. That's a natural progression, right? Accessibility to this market. We've been the first step in that space and excited to see how it's all developing.
Okay, perfect.
And I can attest to how good that app is, by the way. I'm a customer of Zappo Bank app. It's a really good.
Very good to hear, Stefan. That's
really good. We have a real-time testimony for you, Zappo. We can use that now. That's great. Jesper, always great to speak with you. Jesper very much has the EU side and sort of the global perspective on both traditional and digital investments. Why don't you come on and tell us a little bit about yourself and briefly what GSU protocol does?
Thank you, Justin. Absolutely. Yeah, I'm the founder of the GSU system. And basically, we came out of the old monetary world where we developed a method to measure weighted volatility between all currencies. And we're able to quantify that point. So you can call it a monetary GPS system, which is able to find the balance point in between all currencies in real time. That we are able to turn into an exchange rate. And then basically now we are creating the first coin that tracks that rate. It's documented to be the world's most stable rate. to all currencies. So you can, to some extent, compare it with, the first thing maybe coming out of the blockchain that can disrupt the old world, and not just importing, what we see with a lot of dollar stable coins on the market. And yes, we have still contact with a number of central banks. So, and yes, I have a deep understanding of the MiCA if you want to speak about that. But thank you for being here. I look forward to it.
We'll definitely touch on it. And yeah, it's interesting, just the idea of a stablecoin not based on USD. I've seen a couple of them at this point, but that is sort of a new territory. But let's go ahead over to Alex as well. Alex is COO from Chamber of Digital Commerce and spends a lot of time on Capitol Hill talking to lawmakers. So we always appreciate your firsthand perspective. Why don't you come on and just tell us a little bit about yourself?
Sure. Thanks for having me. I always joke that we're like Jon Snow on the wall and the winter is coming, and we're one of the few ones actually guarding it. We lobby for the space, represent the space. We're the largest trade organization in the space, the oldest. We've been around for 9 years, and we represent a lot of the more mature players, the Fidelities of the world, some of the major banks. You can go to our website and see who we have, and some of the major tech players. And some of them are actually will remain confidential, but we're pushing forward and hoping to have pro-innovation, pro-crypto sensible regulation adopted in the U.S. so that we can all enjoy this technology and help spread freedom and innovation around the world.
Perfect. That's great. Has there been it's a great organization, Chamber of Digital Commerce, by the way, everyone. Worked with Benzinga on our last show this past December, the future of digital assets. Have you been inundated with a whole new swath of inquiries since this has gone through? You're getting more. You're already working with a bunch of TradFi companies. Has there been more of that since the approval? Is it feeling more like a green light to everyone?
Well, I think the approval the market is recovering. And so that's been more of the mover. I think the approval hasn't fully kicked in yet. As the investment advisors go out to the clients and pitch the ETFs, we'll probably see that, I'm guessing, in the next, 4 to 6 to 8 months, really start picking up. So we're seeing interest. It's probably more correlated with the market recovery than it is with the approval. But there's no shortage of work. I'm sure we'll dive into this. There are many folks on Capitol Hill that are still very anti the industry. And so our work just doesn't stop.
All right. Perfect.
Right. Yeah. And to kick this off, I think we just get right into it on the ETF approval and why we believe, the SEC is evidently losing ground to deny the ETF approval. So why now did they approve it? Why did they choose right now at this moment in January to approve it? And then we'll do a follow-up question about why now did BlackRock choose to apply for it? So I'd like to hear your guys' thoughts on that matter. And then I'll give you another example of some of the theories about why BlackRock has suddenly changed their mind about getting into this industry. But love to hear what you guys think on this topic.
Let's go ahead over to Stefan. We'll start with you.
Yeah, why they exactly proved it. I think the pressure just has grown. The demand is there. And yeah, so I think just they had to cave to the pressure. They were losing legal battles left, right, and center. A lot of people were demanding change. I think the pressure just grew. And as a result, now that institutions like BlackRock, Fidelity, FANEC are all of a sudden engaging and providing additional credibility, they just felt that I think that pressure just got too big. And, here we are today, ETF approved. And, it's a start. I think everybody was expecting a lot of money to pour in right away. And I think nobody realized that actually GBTC is sitting on a lot of trust holders, and they're going to migrate across because the cost structure of an ETF is a lot cheaper. Everybody didn't realize how much actually FTX is sitting on in terms of their shares. And so that's $1 billion worth of GBTCs. Those are just being sold. Those aren't being replenished and converted. but it's users and holders of the GBTC that are actually selling it in the market. And some of them will be taking profit because they bought it at the 30-50% discount, early around 2023. And so, that was a big trade that a lot of investors did, buying volume and bulk of GBTC at discount and then selling it when it hit parity with the Bitcoin price. And so I think those are just elements that have kicked in. And, the way institutions start buying and purchasing these ETFs is going to be, it's a golf game here. It's a convincing you how to do this there, sitting down for big meetings, big presentations. I got committees to convince, and then boom, I might allocate 0.5% of our endowment will go towards this ETF. And so that's going to sort of take some time to work through the sales channels as they do in more traditional finance sales processes.
Yeah.
I think, Justin, if I can just jump in as well, like it's also relevant, right, to hear and always see sort of where the US is positioning itself in these sort of markets around the world. So, allowing, everyone talks about some of the issues around the SEC, etc., but allowing secure access to Bitcoin as an asset class through a structured and regulated ETF seems like quite, rather than allowing or forcing continued unregulated access, global points to this market, creating sort of these secure entry points. Plus, where is the US sitting versus the rest of the world? I mean, it's, BlackRock and Barclays and JPM, they're using blockchain technology and all sorts of milestone collateral transactions now. I mean, Euroclear, the big sort of European clearinghouse, they're already issuing tokenized digital euro bonds. I think Nomura in Japan have already launched the Ethereum spot fund. HSBC are talking, they've already issued the tokenized ownership of physical gold. Thailand, there are banks there buying stakes in crypto exchange platforms. There was a big purchase the other day. Standard Chartered and Zodia, they've deployed themselves in Hong Kong. So there are a lot of things happening in the world, and the US being such a leader in this regard, I think it's quite important for them to sort of put the foot in the door and say, we're here and we want to, structure these arrangements. So yeah, I see that as one hopefully relevant step. Let's see.
As a follow-up to that question, though, what I would like to know what you guys think is, so Larry Fink, the CEO of BlackRock, he was interviewed about 3 years ago and said absolutely no one was interested in this asset, and they're not talking about it, they're not requesting it. And then he openly says, yes, I've changed my mind. Notoriously, the BlackRock has filed for hundreds of ETFs, been rejected for like 1 out of 540. So why now? Is it simply the right time in the market? Is it because they have the rails in place now to accept customers' money? Or a theory by Arthur Hayes, for example, the ex-CEO of BitMEX, he says that it could be a hedge against the traditional finance system in some way, as Kathy Wood calls it a flight to safety, and Larry Fink calls it a flight to quality. And then we had the bank run in which Bitcoin went from $19,000 to $30,000. So could it be that if there were to be troubles in the traditional financial world, that BlackRock wants and other entities want the money to maintain within the traditional financial structure? What do you guys think about this and the timing of this?
Yeah. Go, Alex.
Let's go ahead. Let's go ahead to Alex, then we'll go over to Jesper. Go ahead, Alex.
I can jump in. I just want to mention something that Joey said before. It's very critical. As Churchill said, the U.S. always does the right thing after exhausting all other options. And so here we are. I'm bullish on the U.S. because we do end up doing the right thing after exhausting all other options. And man, have we exhausted all those other options before approving the spot ETF? Look, they just a touch on the other point. They approved it because they got it was a extremely it was a big loss for them in the DC Circuit Court. All three judges basically said they were capricious in their decision, and arbitrary and capricious, and that's in legal terms it's a pretty big insult to the SEC as lawyers get. Why did BlackRock go in? I don't know if maybe Arthur Hayes is right. He's been fairly prescient on many things in the space. I think people who study Bitcoin ultimately understand Bitcoin. Look, the rails they've always had. The ETF rails have been around for a while. And actually, an ETF is a fantastic consumer wrapper to get people into this product because mom and pop, my mom and dad, and I'm sure all of our friends that are normies are not going to go in and self-custody coins. It's just hard. It's hard. And so ETF solves the custody problem. Now for institutions, they're targeting, small family offices down to retail investors. That's what the ETF is for. Outside of the ETF, I think they're starting to see the demand in the market, because I would encourage us to look beyond the spot ETF and think about all the other financial products that'll be layered onto it. Options. GP Grayscale already filed for an options ETF, right? So you'll have covered calls. You'll have various exotics built upon the spot ETF, using that as the base, if you will. And this is what happens in all traditional markets as they become more monetized and they become more mature. I think BlackRock sees the demand. I'm sure they understand. I'm sure once you study Bitcoin, Larry Fink came around to it. I'm hoping he's actually doing it not just for the business opportunity, but because he understands what Bitcoin brings to people around the world. And ultimately, I think it's hard to deny a better technology. And Bitcoin is just a better technology. And it's institutional. It's at a scale that other crypto projects aren't. And so for TradFi to get in and a serious way to markets, you need to have an asset that's, why do we look at volumes in the ETF space versus AUM, assets under management? You need to have a deep market that you can trade in and out of and move in and out of without, moving the market down. There's no slippage or very little slippage. Bitcoin is the only one, potentially Ethereum. I'm sure we'll talk about that ETF, but I think it was just, the time comes and everyone buys Bitcoin at the price they deserve. And here we are. This is when the normies are going to get in, BlackRock will get in, but over the long term, it's going to be, there'll be like the BC and AD, before the ETF and after the ETF. I think it's a very pivotal moment in our space.
And just to play off that a little bit, Jesper, part of the reason why I thought you'd be great for the panel, I wanted to get a perspective, coming out of the EU as well. It not be so completely U.S. centric as media in the U.S. often is, in my opinion. I'm just going to point out for the people at home who don't know, of course, Bitcoin ETFs have been available for several years in the EU. Why all the adulation, and is it shared, on a global level? Is that because it's unlocking a huge new market? Of course, I suppose that's true. Or is this, what kind of validation is this to have it approved, have Bitcoin ETFs approved in the US?
I think it's a monster thing. It's really big. And the way I see it, it's not like you can expect the price to rise, fast, just like it was said before. It's more like it's a stamp that this is relevant. So it's went from not relevant to being relevant, because now due to the court, and that's, I think the timing is only due to the pressure from the court to actually do this. So if the court hadn't stepped in last year, then it wouldn't have happened. So and I actually read Gensler's statement in connection with this approval of the ETF, and it's definitely not very positive. It's definitely, I'm highly against this, and I don't endorse it. I don't like it, and but nevertheless, he had to. And it's like saying, all right, I cannot disregard this anymore. This is relevant for everybody, for the end user, for the companies, for the investors, for the financial system. So, and now, as Stefan just said before, now we will have a long process of selling it in, because it's not going to be a fast sale, but it's going to be a humongous big sale. And that's how I see it. And if you look at the media in the crypto industry, most media coverage about crypto in Europe is very negative. It's just like, I don't know why, but it just is. And if you look at the crypto media, they're mostly driven by US interests. And so, of course, it's mostly about what's going on in the US arena. And therefore, the focus has been very much on the US ETF. And I think it's like, I'm just super happy, because it's going to, it's taking the small shark from the lake into the big sea with the big sharks. But that also, potentially poses a bit of a threat, because if you saw what Jamie Dimon said at the World Economic Forum just last week, he's still really much against Bitcoin, and now he has an easy access to short it. So when you go into this game, you have to understand it's both a big opportunity because we can, promote it to the whole world now, but it's also to some extent a threat because the players who do not like us will, have the tools they use to try to push it the other way.
Right, definitely. Leading to my next question, though, obviously everyone on the panel and almost everyone listening, a bunch of huge Gary Gensler fans, there's no doubt we are. How could you not be? That face, that charm. Alex is thinking like, yeah, you don't actually have to talk to him, Justin. I guess you'll be in the same room with him at some point or another. I'm just kidding, of course, Gary. He has he is a very meritorious individual after all. But I think it might be fair to say that the relationship between the crypto and the SEC last year was at times slightly pugilistic. There have been people have suggested that there was regulation being done by litigation throughout last year. Are we seeing a turning point? I mean, we're characterizing a thing here where the SEC made this decision because the precedent with the Grayscale case kind of put them in the position of having to admit the inevitability. Are we looking at a kinder, gentler relationship with our regulators here in the U.S. in 2024? Stefan, come on, what do you think? Give me some optimism, man. You're an optimistic spirit.
I mean, I'm very optimistic for crypto and all the work that I've been seeing taking place around improving the user experience around decentralized services. I am very pessimistic around the regulatory framework. I think there is still going to be an even greater battle taking place between the decentralized finance and the centralized finance and the legacy infrastructure. The legacy players will not give up their power and their role in the ecosystem lightly. They're going to fight, die hard, tooth and nail, leverage every single lobby cent and micro cent that they can find, even though that's losing power in purchasing capability. But they're going to do that, and I just don't see ETF is just more reason to shut down anything decentralized. Look at Europe. Europe's trying to put into a law where any transfer on a peer-to-peer basis greater than, I think it's $1,000 has to go through a middleman. So all of a sudden, what? The whole point is taking out cost in the system. You're layering in legally, from a regulatory standpoint, toll takers who add zero value in the ecosystem. It's just, to me, it's just baffling. And I think we're going to see more and more of regulatory hurdles like that come about. And all that's going to do is push away the innovation that is in front of us here that will create millions of new jobs, trillions in new income, and trillions in tax dollars as a result out of that. And so you're pushing that offshore. Already today, 75% of crypto developers are no longer in the US. 75% of developers, 12% of them are in India. And so what does that mean? That means we're moving a lot of them. Europeans have all shifted offshore. They're now living in Dubai. Why? Because the friendly legal infrastructure. You can build in Abu Dhabi, you can now build structured products today in the financial. So all those products that we were referring to, I think Joey or Alex, you mentioned them, right? So I can layer on top, I can use collateral, I can build other structured types of products, financial products off the back of these ETFs. They're being developed in Abu Dhabi, or Hong Kong or Singapore or Zurich, Switzerland, right? So those are the markets that are trying to create hubs where you can then go and create these interesting products. And that is where the excitement lies. That is where new job opportunities are going to be created, millions of dollars in salaries going to be earned, as well as profits generated in those markets that will then provide tax income, which will then pay off the debt that those countries are suffering with right now, right? And so I think that's where the opportunity lies and the excitement. I mean, Xapo Bank is in Gibraltar for a reason, right? And so that's why you're seeing these markets play out and provide interesting new jurisdictions that are where I can work. I used to be in Austin. I'm now in Zurich, right? Why? It's like because there's talent here, there's opportunities here, and there's a legal framework that's a bit more friendly. I mean, I'm not only here, but I'm rotating between the two. But that's beside the point. And you just see and feel the optimism that resides in markets like Zurich or Abu Dhabi and Dubai.
I love that analysis. That's amazing. Yeah.
Yeah, definitely. Stefan's always great. You know, I don't know, Joey. I detect a certain apprehension in Stefan's tone, however, in regards to the SEC. Of course, Sapo has to keep on top of this globally. You know, what do you think? Could we look at sunnier climes with the SEC? Maybe less, you know, suing Binance and telling CZ that he can't leave the country. Maybe fewer of those kind of. The optics get a little odd around that kind of stuff when you're trying to balance it in with some sort of opening up of things with crypto.
Yeah, absolutely. I mean, I think there are two angles to this. So, and there's one point I was going to mention earlier, which is the question that Megan put about sort of why are the views of platforms like BlackRock changing now? Why do we have the BlackRock CEO come out saying, you know, crypto is going to play a relevant sort of flight to quality? I would say the whole ecosystem, there's a fundamental point about learning and understanding what this is. So all of us that had conversations with authorities or policymakers or banks or whatever it was 5, 6, 7, 8 years ago, as Zappa was doing, it was all this awful world that we were creating, and it was all crazy. And you'd have meetings with the regulatory authorities. They wouldn't send policy teams, they would send, you know, enforcement units to talk to you about trying to regulate the space. So things are, and that's what has always happened, right? So even in the banking universe, when the ATM came around as a concept, the world would like oppose it, or when internet banking came around, it would be opposed. This is all crazy new technology, and why you're all doing this. So there's a clear kind of learning process, and with the regulators, it's the same thing. And I would say, although there are lots of difficult things relating to the US, can't go into all of that stuff, I would say that there are many jurisdictions in the world that are learning about this ecosystem, and they've not really decided on the kinds of frameworks that they want to introduce. So there's a quasi kind of let's see what the US does. Now the EU is defining a new standard. That's going to be extremely interesting. You have countries like Korea looking very, very closely at MiCA. You have most of the world looking at now. It's not just FATF, right? It's IOSCO, it's the FSB, all these international organizations defining standards, and countries have to react to that. But you know, there are some, you know, some people will pitch Europe as the saving grace solution with the MiCA framework. And it is fantastic in one sense, but a lot of those authorities are also going to go through very, very deep learning curves. And I can tell you, some countries in Europe have like 18 or 20,000 CASP-related entities registered in those countries. You know, that's going to create a whirlwind of issues as well. So I wouldn't quite put it as simply as the US is very, very bad, the rest of the world provides a solution. But I would absolutely agree with Stefan from the point of view is a lot of those authorities are very open. They have a whiteboard style approach. They want to talk to you, they want to understand, they want to interact with the ecosystem, and they want to define appropriate standards and frameworks for the industry. Some other countries, and I probably put the US in that category, are sort of, we have rules, we have the definition of a security, we have existing infrastructure, let's just fit all of this new universe into that legacy framework. And I really don't think that's the right approach to take at all. So that's my view.
Jesper has been alluded to, has been alluded to a couple of times here. I mean, at least the thing about the EU and MiCA is at least you have MiCA. Like,
at least you know it's bad.
You know, it's like you have to admire someone else's. When you're younger, you have to admire someone else's crappy car if you have no car at all.
I actually think, you know, to some extent, the US was behind, but with this move, because yes, they did sue Binance, etc., but they didn't put in place a final law that simply makes it difficult. Yeah, they did make some lawsuits, but with the ETF, as Alex correctly said, you know, they did the right thing, and actually showing, all right, we are also going to be dominant in this market here. They haven't decided on a final law that is difficult to work within. And I would say, as an issuer, the MiCA is really difficult. It's like we can do whatever we want from the regulatory. It's like from July this year, if you want to introduce a new coin, it needs to have a white paper that actually meets the criteria of a prospectus. It needs to be approved. There's no process for that approval, so they can stretch it for half a year or a year, as long as they like. And just yesterday, I read this part, which is about the new framework that is coming, is the AML framework that they're discussing, where, as Stefan correctly said, that self-custody addresses holding more than €1,000 will be illegal. And I'm just thinking, how the fuck will they control that, you know? And
I'm interested, Jesper, in seeing what you think, because like defining the right regulatory standards, it's very important. But some people have said, I mean, Zappa were part of Libra, obviously, and that the whole significant asset class of a stablecoin issuance in the EU. I mean, you're bringing an issuer not only within the scope of the national regulatory authority, but also the ECB, the European Central Bank. That's really significant. So the question of, you know, it's proportionality. Is it proportionate to apply that level of regulation to an incumbent startup industry? And is there a form of, I mean, I always call it a tech infringement. So, you know, we can operate eBay and I can sell you and Stefan a baseball bat. Now I'm going to digitize that baseball bat using a form of blockchain technology for, you know, an immediate cross-border settlement and no risk, and it all sounds wonderful. Now I've digitized it, and I'm using a blockchain. Now I'm a fully blown regulated financial services business in Europe. You know, that is pretty tough.
I think the problem is exactly as Justin said before, that they are trying to squeeze in. They understand the old world very well, but they really do not understand the technology, and therefore they are looking into the old world. It's like trying to create the rule for driving using the environmental law, or, you know, using other legal framework instead of, you know, saying, all right, what is this going to do for the way that people possess their assets? And I'm really not very fond of MiCA, to be honest. I see that the problem I see in it really is that there are all these rubber paragraphs that just leaves a lot of decision with the local authorities. They're not obligated to reply. They can take as long as they want. There's no reason. They don't need to argue why they don't approve it, etc., etc. And therefore, it becomes a matter of opinion rather than are you actually, you know, qualified to do what you want to do.
But this all flows through from the FSB. So the FSB issue, the most famous statement is, you know, same activity, same risk, same rules. So there are lots of countries in the world that literally read that and take it literally as the same rules applying to like this completely new universe. I wouldn't be opposed to similar risks and similar activity. So let's create standards that are similar in terms of, you know, what the objectives of the rules are, but not using exactly the same rules. And that's really
you can't
dangerous.
use the same rules.
Yeah. The Howie system was 70 years old, right? Yeah. Implemented for a completely different time in society and completely different technology. So it's absurd.
And Stefan talked about the whole DeFi universe, and again, that's even more sensitive, because if you try to apply the same activity, same rules principle to a decentralized network, or it's just even more bizarre. So, you know, there are lots of countries literally trying to figure out what to do, how to approach us, how to form standards, and thinking of it as a whiteboard style open approach.
But on the DeFi angle to that, in the UAE you already have free zones, focused on that, so you can actually operate a DeFi in Rakdao, specialized in that area. And for that reason alone, I think a lot of, like, the EU will lose out in that area, because they are saying, all right, we understand it. They hired some very, very qualified people. They created a framework and a stable platform from where you can operate. So, business will just go there.
I'd like to get Alex's take on this, Alex, because what I'm trying to say about the SEC's attitude, and are we looking at a kind of a sunnier day, is like, in terms of optics, which is how I tend to think about things. They were just kind of put into a corner where perhaps it's arguable they kind of had to approve. They had resisted as long as they could. What's the move from here? Because it seems like it could go one of two ways. They could either assert their dominance again by taking the next Binance, whoever else, I won't speculate on who, and bring them into litigation, or they could, or is this an opportunity for them to maybe establish a better rapport? And will this be addressed, or will they be quiet and leading up to the actual presidential election? What way does it seem like the winds are blowing in Capitol Hill right now?
Unfortunately, the winds are blowing one ways. Okay, the SEC is not changing anything anytime soon, not under the current administration. And so there are many things that are going on in Capitol Hill outside of the SEC, the whole security versus commodity, the discussion. There are accounting rules that we're, for example, pushing on proof of reserves. There's like using mixers and FinCEN and etc. However, those are all important things. They're skirmishes. The war, so to speak, is we need to have policy. This has to be an act of Congress. We cannot continue to adjudicate this to the courts. And elections have consequences in the US, in Europe, and so on. This is a very big year for crypto. We're tilting in a major way towards the elections and getting the right candidates in. We've been asking for donations here and so on and so forth, not to plug it, but to plug it because as a space, we're pretty bad about actually organizing and being able to go after and put the right candidates into office and punish the ones that frankly don't like crypto.
Well, and the chamber's a nonprofit as well. I'm okay plugging nonprofits.
Thank you. I appreciate it. Look, I mean, we win when everyone wins, right? Truly, there's every dollar goes towards some sort of defense of the industry. Gary, I don't know if he stays in this position after this election, regardless of who wins. Obviously, if we elect a more pro-crypto candidate at the presidential level, even RFK is speaking about it. There is Dean Phillips that's starting to rise up. I actually don't know his stance on crypto. He's a very young candidate, but he's starting to rise up against Biden. I don't know if under a Biden administration we get any kind of relief, although I do think Gary Gensler moves on. He has political ambitions, always has. This is why his stance is what it is. But elections have consequences. And so, we have to show up big in this election. We just have to. I'm not going to tell anyone who to vote for, other than I hope we elect more pro-crypto, open-minded candidates into office, because otherwise I think it was Joey or Stefan said this, that Stefan mentioned developers going overseas. It's 100% true. We're bleeding out developers, and we're frankly ceding, from a patriotic perspective, we're ceding the financial leadership that the US has. And I'll just one really quick point. New York, by the way, gets this. And there are a lot of politicians in New York, especially Manhattan-oriented politicians, governors, the mayor, Richie Torres, coming out of New York from the House of Representatives, understand that we're ceding financial leadership of the future to the rest of the world, and that it's unfortunate.
Yeah, and there is that. Megan, sorry to interrupt you. There is. It's the biggest sensitivity is speed and pace. It's an incredibly fast-moving industry. The evolution is just at lightning speed. What the FATF were talking about in 2019, I mean, half of that isn't even relevant. We're only in just beginning of 2024. So for me, as an external person, when I spend a lot of time with colleagues in the US, very, very, very smart people, and I find it absolutely incredible. Sort of 7 years we're having the same discussion. The EU is not a fast-moving body, but they've done a hell of a lot, and we're still here sort of talking about the security tests, and it's just spectacular from an external point of view. Sort of all that's being asked is to give some form of legal and regulatory clarity and certainty to the industry. And platforms like Zappo, who had the bit license in New York and were operating over there, we moved to a small jurisdiction where we could literally, in Gibraltar, engage with the government, engage with the policymakers, legislate from the ground up, build a framework that we were comfortable with and that provided all of our users and consumer security, et cetera, and it wasn't to avoid the US, it was because we couldn't get that clarity there. That's the reality.
But I do think Europe is very different to the US. Europe they love regulating, right? I mean, there are a bunch of regulators, a bunch of bureaucrats, and they pride themselves on regulation. There is no tech leadership in Europe, right? It's all in the US. The US is really much more a balance of power, right? You have the lobbyists that really dictate the influence of regulators and governments, right? So in a way, it's much more commercially driven. And the powers that be have a lot more funding and have allocated a lot more resources towards driving their message and protecting their positions in an economy. And so I think they're very separate economies. And I think the regulators have no clue in Europe what is good for business. They just are proud. Oh, we did this great document. Yeah, clap. Look at them. I mean, a whole bunch of regulators clap themselves in a room. They're standing there. Oh, we did an AI law. We're the best, right? And the worst thing that happened to Europe was this, I don't know, the privacy law that they put into place that now means every time you come to Europe, you get a nice pop-up, accept cookies, and nobody reads them anymore. And I don't know what the purpose of that is. All it is create a worse user experience. And this idea of having to find middlemen is creating worse user experiences. I think it's all about the incentives. And what the US did phenomenally well was incentivizing the internet business when they gave sales tax for free if you bought using online services.
Sure.
That spurned a whole new industry. And look at all the jobs that it created. Look at the leadership that came out of those companies. And, just from an economic standpoint, that leadership that was created. Vivek, I thought, put out a really good framework that would help drive adoption for, it was like terminating, the workforce at the SEC. I mean, that of course gets buzz. But I mean, ultimately he said, directing the government not to target crypto software developers, permit self-hosted wallet use without tax reporting requirements. You don't need it. As soon as I have your wallet address, anyway, I see all your income. I see all your movements. Come on, spend those sleuths, those 80,000 new tax guys just to watch and learn how to track explorers. That's all they need to do. And then regulate crypto as a commodity. And I thought that was a great framework to start with. Simple. It's like 10 commandments. That's all we need. Those are the guidelines. And if you're outside of those, we'll slap you and we'll come after you and we'll figure out how far outside of those you can go. But it's a great start to drive innovation, drive job creation, and drive income and wealth generation for a new generation. Because all of us are here building out new systems. Not just new currency, we're building new systems that are going to replace and make the old systems redundant, as we saw what Amazon did to Barnes & Noble, what Netflix did to Blockbuster, right? Those are all innovations that came about because we were allowing that disruption. But when it comes to money, when it comes to data, when it comes to AI, that we won't allow. When it comes to gene technology, health and wellness, those we won't allow, right? Because I don't know why, because we as a boomer generation, we don't like that, or I don't know what the terms and the reason behind that is, but that is the view. And I think frameworks like Vivek that he put out, maybe it's not perfect, maybe there's room for improvement, but that is the framework that we need that will bring back and bring about what we saw in the internet boom come to the, sort of crypto boom and maybe other industries.
That's amazing. That's the point I was going to bring up earlier, Stefan, this is something that we went over with earlier speaker, Brock Pierce. During the time of the internet and the Clinton administration, and the media was asking him, are you going to get out in front of this? Are you going to regulate this? And he kind of just let it rip. He let it be free. And as a result of that, we have Amazon in the US, we've got Uber, we've got all the biggest players, Google. And since 2021, since Gary Gensler was voted into office, and now up to 2023, we have like double the crypto enforcement actions since he became in office. And it's just, like Tim Draper said on my podcast, it's the fact that, or he believes that the stronger leaders allow for that freedom, allow for that innovation, and let people be free, which leads to better GDP, which creates those jobs, doesn't stifle innovation. So when looking at it like that, and if somebody gets elected that's pro crypto, do you think we could take that route again? Have we fumbled that leadership? Because one of the things he said is he didn't anticipate how hard traditional, people in the government and regulators would fight to protect the power of the dollar and the traditional financial system without being open to new systems. So how do you see that changing if we get different leadership? Do you think we could go that route, or does it need to be different now that there's kind of like different risks in place?
I think we need different leadership that's also going to bring about different types of ways to manage the administration associated with the leadership and to back the leadership versus constantly building out a bureaucracy and protecting the bureaucracy's underlying, protecting my bureaucracy, my role, because all we've seen, budgets in governments just grow. They never shrink. They never shift. They never cut something down and focus on a new system. I look at the federal system's statistical system. I mean, that's now 20 departments with overlapping reaches. None of them talk to each other. They've all got bloated organizations, manually aggregating data, not using new systems, don't have the budget to afford new systems, but we have the budget to hire 80,000 new headcount. And if you look at the job creation over the last 3 to 4 years, it's been in government. It hasn't been in the private sector. The private sector has been very selective in hiring resources that help them further their cause, right? And so how do we get rid of the management layer inside, as Vivek puts it, inside these governments? And I think if you have a new leader coming in, and based on some of the candidates out there, we're still hopeful that they will maybe identify opportunities where we can reduce some of these bureaus, change the incentives in terms of how they're operated so that they can then do the best for the nation versus actually hindering evolution and hindering innovation and slowing down the economy, right?
Absolutely.
At least I'm hopeful, but you never know. I mean, it's like I'm sure it's definitely not going to be an easy task, but Elon Musk managed to pull it off at Twitter. He got rid of 90% of the people, and then ultimately with 10% of the staff, I'm producing more in over the period of 4, 5, 6 months than they produced since inception. I mean, okay, take that with a grain of salt, take that with a bit of marketing, but still, that is now sort of the mantra. If you look at Silicon Valley, and tech companies are going to start doing that too.
That's like the effective accelerationism movement, which is very counter to the bureaucratic movement of effective regulation or over-regulation or rulemaking upon rulemaking. It's just an interesting little point to think about. We touched upon earlier how you can look at the wallet address. You can see everything that's moving in and out. We've taken I don't know if your listeners or the viewers have been paying attention to the ETF flows. And you have Eric Balkunas and Jeff Safer, they're pretty good on crypto on X, on crypto X, I guess, crypto Twitter, that talk about the flows, and they do these daily tallies, and there's whole mess about T+1, T+2 settlement, what the settlement is. And I remember asking the same question of Matt Hogan from Bitwise, they're a member of ours, and we did a spaces, and it was talking about the settlement. But the irony is that we're taking a transparent asset and stuffing it into an opaque system. Exactly, where we're trying to figure out these flows, and nobody knows until the data is reported a couple of days later, and the money is sent to these APs, and it's just it's the height of irony of what's actually happening. Sooner or later, these guys will all come around. I think a lot of it will sit on blockchain rails, if you will, and I think a lot of it will actually sit on Bitcoin rails, just because it's the most immutable chain, and you want to store your value in the most immutable chain. But it's just, it's like it's slowly but painfully we're getting there, but it's very painful. The whole thing is very painful.
I'm going to float out a question. We have about 5 minutes left, by the way. Thanks to all the guests for staying a few minutes later. Megan and I don't need 15 minutes of outro, so I figure we'll add it to the panel. Although we could, I could get my ukulele, we could sing some songs. Maybe it would be fun. We'll try that for next time, though. But just to throw another question out there, I already know that a couple of people on the panel have opinions about this, but is it too conspiratorial to look at the time the SEC took in approving the Bitcoin ETF and think to yourself that there's a certain amount of protectionism around the dominance of USD on a global stage? I mean, granted, BTC is not going to replace it next year or in the next 10 years. I don't know. I mean, it's possible. It's looking more possible than it looked in 2017. That's for sure. Do you think that motivated some of the delays? Jesper, what do you think?
I think they don't know what to do, because if you're good at playing chess, which they definitely are in Washington, they know the end game, and that is that the USD will lose its position to some extent to alternatives, and basically the function of the dollar is for the central banks as a reserve currency. So other countries are holding some USD. And then the other part is for transactions, and there are for private holders. These are like the three main groups. And I think it's quite obvious that it will have to, you control 88% of all global transactions goes through the US dollar on a daily basis. That's 7 trillion on a daily basis going through the USD, where the USD only makes up or the US only makes up less than 10% of global trade. So there's like 78% that could go between South Africa and Australia and Japan and China, not using the USD. And that's why there is this humongous resistance, because what is this going to mean? What influence is it going to have? And just like we are having this conference now online, and we can see pictures and we speak, we couldn't do that 30 years back. And it's the same evolution we're going to see with the blockchain, that better things, better stability is going to come out of the blockchain than exist in the old world. That it by far will outperform the US dollar. And of course they don't like it. If I was the US dollar, I wouldn't like it either, but that's how it is.
I think like I don't think that the US is that concerned about US currency dominance, or at least it's not even in the same bracket as many other countries in the world. I mean, if you start talking about the Argentinian peso or Zimbabwe, think about Venezuela, think about many jurisdictions across Africa, etc. There's real currency concern. I mean, if you talk to some of those jurisdictions about currency or Bitcoin price volatility, they look at you like, what are you talking about? That's not volatile. Volatile is my savings in my bank account. 150% inflation, massive volatility, and suddenly you have this access point to a unit of value that is not controlled locally. So that the ETF has a piece to play in that, but the Bitcoin community has all the access to the protocol has different points to play, and that will be a different point of attraction. That is definitely escalating. That's got nothing to do with the US.
Can I just jump onto this point? I think we need to think of this as Nick Bhatia wrote a great book, Layered Money, for those who haven't read it. It's a great fast read. We just have to think of our system as layered money. I believe that Bitcoin will eat part of the dollar, but it won't eat the dollar fully. And incidentally, the way to keep a reserve currency, the reserve currency, you have to be open and cannot have any capital controls, because once you have capital controls, it allows another currency or another money to step in and say, well, we're more free, so use us. Why would you use something less free than more free, all things being equal? And so I think, Bitcoin will be the sound money base layer. Nobody's paying with Bitcoin. That, I think, dream is done, because you don't want to pay with something that actually accrues value over time. But the dollar will be a payment currency and a payment rails. And I think in the long run, we're going to have a basket of, call it dollar, euro, the Chinese yuan, some sort of Bitcoin-based, basket. There'll be 5 or 6 global currencies, and like Joey said, when you're looking at smaller countries that are either have major currency fluctuations and or are dollarized or have their debt, in dollars, but their currency is just fluctuating, will ultimately move over to a Bitcoin or some sort of commodity-based basket, and or a combination of those things. Jesper, I agree they will eat the dollar, but these guys.
No. I'm just saying that if you don't have an alternative, because right now you can read all the reports from all the big banks saying, hey, the dollar position is not in risk because there is no better fiat currency. But just like, Blockbuster wasn't outbeaten by another chain, they were outbeaten by Netflix. And just like Kodak wasn't, thrown out of the game by another producer of cameras, but by the phone. It's the same that the disruption will come from another arena. So, and that will be the blockchain arena, not necessarily the Bitcoin arena, but from the blockchain arena. And so I see that the blockchain systems and the ecosystems we are building, without doubt, will outbeat them. It's just a matter of time.
Right. And transitioning now into, we've been speaking about institutions and the rails in place and legislation governing bodies. But so I think a lot of the viewers would like to know, in between like the irony that we've spoken about kind of controlling what's going on and accessibility, how will this actually benefit the average everyday retail investor? Alex, did you want to start with that one?
Sure. I think the more we move it into a mainstream finance, ETF is a great example of it, the more I think it will just increase adoption with average retailers. I think their time will come. If I can just pivot for a second, the one scenario I'm a little bit nervous about is just seeing it from a little bit of a policy perspective is, we have a big run up, and when the RIAs tell the average Joe and Jane Main Street, invest, and we put people's retirements in Bitcoin, and we have a fall afterwards, which we probably will. I mean, everyone needs to be baptized by fire, but no coiners and normies. It's a rough ride, right? When you're seeing your portfolio go down by 70%. Sure. When that happens, and they call the congressmen and senators and say, "Hey, this thing was a Ponzi. Why didn't you do more to protect me?" And so I think, I'm a little bit nervous about that situation, right? Because people are going to get in the ETF without understanding Bitcoin. To date, we've had people in Bitcoin who believe. And in crypto, it's hard. There's friction points, so it's self-selection. You believe in the space. I'm a little bit nervous about that situation. And that's actually one way the major players can, quote unquote, I don't know if they can kill it. They're not going to be able to kill the industry, but they can put a lot of pressure on it, ride it up, dump it hard, and then put political pressure to either effectively kill it by just putting, a lot of rules and regulations in place. And so I think it's incumbent upon all of us to bring in this next wave very carefully, very diligently, and not so much for the, very mature CEOs that we have on this call here, but when we look outside and all the influencers and there's a lot of garbage in the space, let's be honest. Getting rid of all of that and making sure that people are in and they understand what they're getting into, I think is going to be very, very critical. That this next wave down, that could be a very hidden wave that we're not quite prepared for.
Right.
Let me just drop a comment very quickly, though, Jesper. I'm really looking forward to when people from my network call me and say, "Jesper, how do I get some Bitcoins?" And I can say, just call your bank, right. Because and just like Brooks said, he said, you crawl before you walk and you walk before you run. And I actually think, it will make a lot of people buy a very small portion and get interested in it, learn about it. Then one day they maybe will get their own wallet, and then they will start using it. So it's a process, but it's definitely positive.
It'll also put price pressure on. I mean, at the moment, buying an ETF and BTC ETF and paying whatever it is, 30 basis points as a management fee is cheaper than buying BTC directly through some exchange platforms when you start factoring the spreads and the margins, etc. So that's going to put price pressure on those exchanges to do things differently. And then it'll be attractive to, like, certain secure, easy retail markets. But then from the Bitcoin community, from the purists, you're not acquiring the asset directly. So I think some people will hold on to that. Through Zappa, you're buying your BTC. Through an ETF, you're exposing yourself to the price, right? So those are two slightly different things.
And with that, we're actually at time, gentlemen. It has been such an honor to have all of you here. It's always a little bit more of a rushed conversation on video versus doing it on our spaces. To everyone listening, come on and listen to the Benzinga Spaces. I'm sure I'll have all of these people back. This has been such a great discussion. I really appreciate you all taking the time to share your thoughts. And Alex, I love and even covet your neon Bitcoin sign.
This is how we do it at the chamber. All Bitcoin all the time.
All right, thank you guys. It's been fantastic having you on. Thank you so much.
Thanks,
for your
guys.
Thank you.
Ciao.
Bye-bye.
Thank you, guys. And Megan, you've been a fantastic. I guess we'll just. Oh, there we go. I'm not usually. I'm logged in, so I could change it myself. But you've been. Thank you so much for coming on and being co-host with me today. We should definitely do this again. You've
Absolutely.
been great. You have any final words for us as we close up the show?
I mean, nothing. Just thanks for coming and bringing the most relevant conversations in crypto to the forefront to give the audience, the latest on what's going on, and these insightful conversations to hopefully pave the way for the foundational building blocks of the future of the internet. Justin, it's all happening here, so it's super exciting.
am always impressed at the highly intelligent people that will take time out of their day to come and speak with me. I'm always flattered by it, and I appreciate you taking the time. What a great panel. What great keynotes. We're going to wrap it up here because we are at time, folks. But Megan, it's been a delight. And thank you, everyone, for joining us today. I hope that you have a great day. Go ahead and follow us on Twitter, follow us on YouTube, and we'll keep bringing more great content at you. All right, everyone. Peace.